Thanks for being here. My name is Jody Samuels, and today I'm going to talk about how I use automation in my trading, since this is the theme of the presentations that you're listening to. So I think you're going to find this somewhat enlightening, but just to give you a little bit of background, I started trading on Wall Street in the 1980s. And the markets now have become quite volatile, so it's reminding me of my trading in the 1980s. I'm totally prepared for this type of price action, but many of you that have started within the last 10 years haven't seen this kind of volatility. But when I first started trading, it was all about discretionary trading and manual trading, even though I always had an Elliott wave bent. That's my thing. For those of you who know me, I know I have a lot of clients on the line. They're saying hello to me. Hi, everyone. Thanks for being here. So I always had an Elliott wave bent. That's our niche. We are Elliott wave experts. We look at the market cycles. When we do our trading, our strategies are based on the market cycles. That's what we do. But over the last few years, I've been really thinking about automating some of these strategies and finding a way to at least semi-automate some of the strategies. So that's what I'm going to talk to you about. So my trading experience begins in the 1980s. So you can say that I have seen the markets evolve and change over many, many years. So this presentation is based on my experience only, and it's really my evolution as a trader and as a trading mentor. So this is for educational purposes only. We're going to talk about, I'm going to define automation, and I'm going to take, this is straight out of the Traders Pendulum, which is the book that I wrote. So I'm going to talk to you about automation versus semi-automation. Then I'm going to show you the scanner, which is a tool that we developed. So we're going to deconstruct the scanner. We're going to find trades, and I'm going to show you how you can purchase the scanner if you want to continue with it. And then I'm going to show you MotiveWave, which is the software that I use, and they have a very interesting scanning capability that I just want to show you. And if you do want to, we don't own MotiveWave, but I do know the owners. They used to live in Toronto, and I met them early on when they first started MotiveWave. So if you would like to jot down, if you want to take a 2-week trial, please use this link, bit.ly/EW charts. That's for MotiveWave. So let's get started. So this is me when I'm presenting a little bit about my book, and this is the Traders Pendulum. So that's the book that I wrote. And the Traders Pendulum it's a book about, it really covers a lot of psychology as well as the 10 habits of highly successful traders. So it's a good read if you'd like to get a hold on a copy through Amazon. I know we all have a lot of time on our hands these days. So let me just talk to you about the Traders Pendulum first. The market pendulum, all traders ride on a pendulum every day, and unsuccessful traders ride the pendulum back and forth with no real idea of the pendulum swing. Successful traders recognize that the pendulum swings and ride it mindfully. As a result, they make better decisions and better trades. So the pendulum factors represent two situations arising from trading the markets. On the one end of the swing, there is one thing happening, and on the other end, there is another often opposing thing going on. And ideally, you as a trader want to remain or get back to neutral position, because staying at either side can be unproductive. It can cause emotions to fly. It's how we find our opportunities. So let's just break it down into the 3 different types of pendulums. The market pendulum. Right now, we're experiencing a lot of volatility, and the markets trade up and down all the time. So skillful traders know when to enter and exit a trade. They know how to recognize the swings, And they try not to enter trend trades after an extreme and an exhaustive move. They readily understand the market cycles and will enter after corrections or on a breakout of, let's say, the price action if it's been trading sideways. And so these are skills that traders can learn. So what we want to try to do is automate some of this stuff, which is what I'm going to be talking to you about, so that we don't get caught up in the emotional pendulum, which we are all so aware of. I can't tell you how many traders I've spoken to, even recently over the last few weeks, about their emotions getting in the way of their trade. So when we automate or semi-automate, it's really to deal with our emotions. Also to find good trades, to find trades. But then we always have to decide, if we're not fully automated, we have to decide whether we want to take the trade or not. So skills are really important, and I'm definitely not in favor of black boxes. I'm in favor of us knowing what's behind the systems, the automated or semi-automated systems that we're using. So the emotional pendulum is best described with the fear and greed continuum, and you're all very familiar with that. On the one end, you might have a string of winning trades. You want to make more money, so you over leverage, and you think, okay, your mind tells you that you can't go wrong, and you just take bigger position sizes. So in the Forex markets, we have access to leverage. And then what happens? You end up having a losing trade, but it's a bigger loss than you had been losing all along. And now you've given back all of those hard-earned profits. And then on the other end, because you have this loss, you're full of fear and you're afraid to pull the trigger. I spoke to a few people in the last week that have lost their confidence, maybe because of the current market volatility, and they are afraid to pull the trigger. So learning how to balance between fear and greed is really a practice that you can do. And what I do is I've started meditating, and that helps me balance my emotions in trading and outside of trading. So the financial pendulum we're all aware of also. Making money from trading isn't a one-way street. On the one end, there are times when you make money, and then there are times when you lose money. So both winning and losing are part and parcel of trading. We know that. But it's important, like we just discussed, not to bet the ranch, so that if it's a losing trade, you lose the entire account. I mean, it's all about managing the money in the account so that when you win bigger than when you lose. It's really, really, really important to make more money on your winning trades than you lose on your losing trades. Just think about the math. So that's really the goal for us as traders, to extend our profits, extend our gains. But that's not the topic of today. I just wanted to discuss the pendulums with you and then get into the different trading styles and show you the scanner and the scanning technique from Motive Wave. So everybody has a different trading personality. This is habit number 5 from my book, Understand and Exploit Your Unique Trading Personality. Some of you are short-term momentum or day traders because you just don't want to take home a position at the end of the day, and you just want to make your money and be done for the day. You want to be in the market for maybe a couple of hours, 2 to 3 hours, and be done with it. Also, maybe you don't have a lot of patience, and that's your personality type. You just want to take small, positions and get in and out and be done with it. Now, some of you work full time, and that might not be an option for you to trade. However, the good thing about Forex, if you trade the Forex markets, is if you're living on the East Coast, for example, you can trade the Far Eastern session. There are 3 sessions a day, full sessions: the New York market, the European market, and the Asian market. So I know that some people work full time and they come home and they trade the Asian session. Medium-term swing or micro trend, that's about maybe finding a couple of trades a week and looking at your trades at the end of the week. Long-term position traders might look at the markets once a week and manage their positions and look at their profitability, their performance metrics at the end of each month. Short-term momentum or day traders would look at their performance metrics at the end of each day. So we can automate any one of these strategies. Really, it depends on the time frame that we're trading. So with short-term momentum or day trading, would be trading off the smaller time frames. These, this can be automated. Medium-term swing, long-term positions, obviously they're trading off of the bigger time frames. So now let's get into conventional and manual trading versus automated trading. Automated trading below, where I have algorithmic, black box, and high frequency, I leave that to the institutional traders. Okay, I leave that to the institutional traders. Just be aware that there's a lot of automation going on in the markets. So, and all different kinds of strategies being automated, like hundreds of thousands, I don't know, all different kinds of strategies being automated. And it's your job as an independent trader, as a retail trader, not to think about it too much, because you're not competing with the institutional traders. You're really just competing with yourself, right? It's about your performance, and it's not, you don't have to look at over your shoulder to what other people are doing. You need to master yourself and master your own trading. So we're going to just not talk about that. And let's focus on the first part, where I have conventional manual trading, discretionary, and I told you that that's how I started out trading at the bank. I was an interbank trader, and so really we had an analyst sitting on the desk, and he was an Elliott wave analyst, and he would sort of tell us what the lay of the land was for the markets. And we could get charts out ourselves as well until we developed our own proprietary in-house charts. That's, in the 80s, all of the banks had to develop their own charting systems, right? It wasn't, the market opened up in the 70s, and so that was a time when the banks just, had to hire people to develop our own in-house systems, which we did. JP Morgan was at the forefront with risk and the system development. So systematic / mechanical, that's about having a system and mechanically trading that system. So that's the first thing that we learn to do as traders, to have a system and to mechanically trade it. The problem is that the emotions can get in the way, and it tends not to be so mechanical when something is going on in our personal lives, or when we've had a string of losses, and then we just, what we do is really how we manage our emotions. It's a reflection of how we manage our emotions, whether we take the trades or not. Programmable trading platforms for semi-automation, I think that's what we're going to be talking about today. What can we program to at least semi-automate what we're doing? There's so many opportunities out there. To give you an example, like if you trade stocks, what is the universe of stocks? It's huge. So how do you narrow down that universe? So that's where semi-automation can come in. If you trade foreign exchange, if you trade the currencies, there are over 30, 40 different currency pairs that you might be watching. Well, how do you determine what's hot and what's not? How do you determine what to focus on? I mean, there are two approaches. One approach is to just focus on a few different currency pairs, like a few of the major dollar pairs, which is fine in this environment because we're having an all-out dollar move, which I'll show you shortly. But before this environment changed, right, over the last month, we didn't necessarily have a straight dollar move. And we might have had some currencies which outperformed other currencies. So we can use, I'm going to show you how to use the scanner to determine what currencies are hot and which currencies are not. All right, why don't we get started now? Let's talk about the scanner. Deconstructing the scanner, finding trades, and how you can purchase the scanner. By the way, I see that there are a lot of my clients on the line, and you already have access to the scanner, and some of you might already have motive waves. So just listen in and try to, just understand these tools a little bit better, so you have access to this stuff already. So our wavy tunnel scanner is a heat map. It's a standalone heat map, and it covers 36 different currency pairs, 7 majors, those are the major dollar pairs, 21 of the major crosses, and 8 other US dollar pairs. It covers 11 commodities, 14 stock indices, 6 interest rates, and they're mainly US interest rates. Well, not exactly, I'll show you them, 31 in all. And then we have 90 US stocks and 7 cryptocurrencies. This is what the scanner looks like. I just took a snapshot. I took the dollar Canada. I did this work last week. I did this presentation last week, okay? That's when I had time to do it. This week I've been a little upside down. We have we have a little leak in our basement. It's not so little. So I did this work last week, just to let you know. This is how you read the scanner. When the scanner is blue, the trend is up. When the scanner is red, I'm defining it that the trend is down. When the scanner is yellow, the trend is sideways. So this is based on our wavy tunnel strategy. It's really based on moving averages, and when the shorter moving averages are above the longer moving averages, it prints blue. It's that kind of a thing, okay? Because the definition of a trend is higher highs and higher lows. But this gives us a top-down approach. So it gives you a snapshot of what's going on across the different time frames. Now, in the little box itself, you have a date stamp, you have a time, the middle row is the time, and then at the bottom, you have the price at which it turned blue and the number of candles, okay? So let's give you an example. The weekly dollar Canada went long in June, on June 24th, 2018 at 131.44. The 15-minute went short on March 25th. This was a snapshot that I took at that, on March 25th at 143.78. Current price is over here, 143.11. When the boxes are darkened, it just shows that it recently changed. Okay, so in this example, this is an example of the US dollar pairs, and the 5-minute recently changed. I think we have 12 candles. It stays dark blue for 12 candles for the 5, the 15, and the 1-hour charts. For the 4-hour, I think it's 3 candles, and for the daily and the weekly, I think it's 1 candle. So this is a snapshot of the US dollar pairs. I'll show you what they are right now on the scanner as well. And here are the US shares, commodities. Why don't we take a look? Cryptocurrencies. Let's just go right to the scanner and let me show you what we have. Okay, so if I click on scanner, we see Forex Heat Map, CFD Heat Map, Cryptocurrencies Heat Map, and Stocks Heat Map. So now I'm on Forex. So what do we see here? We see let's just do a little bit of an analysis together. These are the major US dollar pairs. And like I mentioned earlier, all of the US pairs seem to be moving together these days because of what's happening, with the easing and the I don't even want to mention the word what's going on. Okay, everything is red, right? Bearish, but not continually so. Let's see when everything. Today is April 3rd. So on April 2nd, the euro turned bearish on the 4-hour, on the 1-hour. On the 15-minute, the euro turned bearish on the 1st at 109.59. On the 2nd, on the 5-minute at 109.19. So the smaller time frames are going to go long and short. They are going to cycle up and down. But as it happened, most of these time frames triggered short on the euro, either in the 109s or on the 4-hour at 108.41. Current price is 107.87. So you're going to ask me, wow, that's fantastic. How would we know when they're turning? Can we be alerted for when they're turning? And the answer is yes. And what you would do is you would go under filter, not under filter, you'd go under notification setting. You would select a symbol, let's say the euro. And if you wanted to be notified when these changed color, like if you noticed that everything was blue, okay, the smaller time frames were blue, but the bigger time frames were red, you would be able to be notified once the smaller time frames turned red, and then you would select a notification type, browser, email, or browser and email, and then you would be notified. So, and then you would save your settings, and you would get your email on your phone, or if you have your screens up, it would show up on your browser. And then you would say, okay, something's happening on the euro. We just turned short. Now, obviously, you would have to have some kind of a view that the euro was going to go down, and you might look at the bigger time frames for that. And then you would look at your charts and say, yeah, the 5-minute just turned short, and you would do your analysis and you would take your trade. So this is an example of semi-automation. So I mentioned earlier that sometimes it's not a straight dollar move, and sometimes it could be a cross move. So what I've done was I have filtered by all of the crosses. So if I click on yen pairs, and we have to just give it a few minutes because for some reason it's slowed down. That went pretty quickly. If I click on yen pairs, I can see that the yen pairs are pretty bearish overall, right? Everything is red. If I click on, let's click on Aussie pairs. It's a little slow. Come on. Here we go. So for those of you who aren't trading Forex, you see some blues and some reds. But where you see the blues, the Aussie is in the second position. So across the board, the Aussie is weak. Aussie US is all red. Euro Aussie means that the euro is stronger vis-a-vis the Aussie. So that's bearish Aussie. Pound Aussie, pound is much stronger vis-a-vis the Aussie. So that's bearish Aussie. And all of these, because the Aussie is the first currency, it's all red. So the Aussie is red. So one of the things that you can do with the scanner when you notice that is, let's say you're bearish the Aussie, and let's say you do trade a number of pairs, you would not want to buy the Aussie, okay? you wouldn't want to buy the Aussie because you see it's bearish across the board. You would only want to buy the Aussie once you see the smaller time frames turning blue. Okay, let's say that's it. You wouldn't want to buy the Aussie. Now we're going to talk about strategies on what you can do to take trades in just a minute. I just wanted to show you how you can use the scanner to look at the different. Let's look at the euro pairs. Look at the different crosses to determine what's moving and what's not. Okay, so these are all the euro pairs. The euro USD is bearish. Look at the euro pound. It's mixed, totally mixed. The euro Aussie, when you see the euro Aussie in blue, it means this is confirming that the Aussie is weaker than the euro. Okay, the Aussie is really weak. And here, the euro, yen, and the euro Swiss are all red. Well, the yen is pretty strong. We looked at the yen crosses. I mean, it take a while to look at this. Then you can look at the CFDs. If you want to see what's going on, let's say with the interest rate markets, I'm just going to scroll down to the interest rate markets. Here they are. Okay, we have Dow, the S&P, NASDAQ, Russell, UK FTSE, German DAX, Europe stocks, and France CAC. So all of these markets, this is interesting because look what's happening on the 5-minute. The 5-minute is the first time frame that's going to give you a clue that something is changing. So even though we are red on the bigger time frames, look what's going on in the 5-minute and the 15-minute. There is some indecision. There is a pause in the downtrend. That's what this is telling us. There's a pause in the downtrend. And if we look, let me bring over the actual stock prices. Let me just, okay, let me bring them over so I can show you. What I've done was on my trading platform, I organized the stocks, and I have the US bond here on the right. These are the daily charts. So let's just look at the S&P. Well, all three across the top are exhibiting the same pattern. We have the Dow, we have the S&P, and we have NASDAQ. And we notice that the 5-minute and the 15-minute are either blue or yellow. So they're against the downtrend, right? So look at this pattern. That's when you can look at this and you can say, we have a strong move up off of the bottom, and then we have a correction. So one of two things is going to happen. If the 5-minute turn blue and then followed by the 15 minutes, then that could be an indication that the third leg is in process to move higher. Okay, so we have to watch it. There's no point in necessarily, I'm not going to tell you to buy these indexes right now. But the possibility exists that, if both smaller time frames, the 5-minute and the 15-minute, flip long, then it could be that we are doing this third leg up. All right, let's get back to the presentation because I think I have a lot to cover and okay. So I just wanted to, describe the scanner. So let's just read this. How to read the scanner. The scanner can also be used for relative strength between the currencies, stock indices, or commodities. We just illustrated that. With currencies, it's important to see if the trends are dollar related or currency specific. If all the dollar pairs are bullish or bearish, then the move is dollar related. And you can tell that so easily with the scanner. If the dollar pairs are mixed, then look to the crosses to see major strength or weakness in specific currencies. So I know that some of you just trade dollar pairs, but if you look at the major strength or weakness in specific currencies by looking at the crosses, you will know which dollar pairs you would want to be buying or selling based on the strength or weakness of the specific currencies. I hope I'm making myself clear. You can also look for correlations across different asset classes and stocks. I didn't even show you the stocks, but we have 90 US stocks there. Filter the markets you want to scan. So I already showed you how I filtered just on the currencies, all of the different crosses, and use notification settings to get notified of a scanner trade by email or web. I showed you that. And then there's also a download PDF feature if you want to download the entire list of the markets for the day and keep track, because the scanner changes all day long. It gets updated, all day long. So this this is from last week, just showing you all the dollar pairs. Okay. And the crosses, but we've already discussed this. So let's move on. Let's move on. Let's move on. Okay, these are the commodity pairs. Yeah, so I guess the purpose of this, I was going to show you that these are the Swiss pairs, these are the yen pairs, so you can filter. And these are the commodity pairs. For those of you who don't trade currencies, the Aussie, the Kiwi, and the dollar Canada are the commodity pairs, so you could filter to see if they're all moving in the same direction. And they are. The Aussie's weakening, the Kiwi is weakening, and the Canada is weakening because the US dollar Canada is moving up. So the Canadian dollar itself is weakening. And then these are the Canada crosses. Okay, and the Aussie crosses. No need to go through these. I guess I gave a lot of examples last week, but I went through, and these are the indices. And here are some stocks. Okay, I took some of the stocks and I created a filter. And at this point, the 5 and the 15-minute were turning blue on all of these stocks, and we had a bit of a correction. Okay, so let's talk about how you can trade with the wavy tunnel scanner. The objective is to provide a graphical representation of the trends across all time frames from the weekly down to the 5-minute chart. And this facilitates a top-down approach which can then be used to focus on high probability trends and filter out low probability moves. So this is semi-automation. Okay. For example, if the trend is down on the higher time frames, the lower time frames will cycle up during corrections and join the trend lower after the correction. So what does this mean? If the trend is down on the higher time frames, let's say the trend is red on the weekly, the daily, the 4-hour, and the lower time frames, the 5 and the 15 have turned blue, you can set your notification to let you know when the 5 and the 15-minute turn red and you can join the trend lower. You, of course, have to do your analysis, but that'll just alert you to joining the trend. And if the trend is up on the higher time frames, the lower time frames will cycle down and you can join the trend higher after the correction is finished. And again, you can use the notification. Now, that's one way of using the scanner. The second way of using the scanner is if the trend is up across all time frames, let's say everything is all blue, we could get ready to trade the correction down because everything doesn't stay blue. We always have corrections. So if you are a counter trend trader, you would definitely have to look at other things, but it could alert you that maybe we are due for a correction. And on the scanner itself, let me just show you. Oh, hang on. On the scanner itself, you can do something like this. If we go to let's go to Forex again. we have pre-programmed all red, all blue, 1 week to 1 hour, all red, etc. Okay, so if I click on all red, let's see what pops up. It's going to show me on all the currency pairs if anything is all red. And it could be that it's not. All right, we have a lot of all reds. So with this, I would definitely be all over this and have a look at the 6 different time frames and see what's going on to see if we are coming to some kind of major bottom. That's what I would look at, okay? Because this could be an opportunity. Not that I advocate going against the trend, and it could just be a small correction, but we are in such volatile markets now that as you know, the markets aren't going straight down or straight up. I mean, except for, initially on the stock indices and on the dollars as well. But that's how you would use the scanner to search for this. There could be an opportunity here. Okay. So let me just explain, and then I'm going to get to motive wave. Let me just explain how we view the markets. This is the 8-wave market cycle. And as I mentioned to you, we are Elliott wave strategists, and the markets move in cycles. So a trend move is usually encapsulated by channel lines. And then when we break down through the channel, we have the correction. If the weekly and the daily are blue, means that we're in an uptrend. And if the small, let's say the 5-minute and the 15-minute are red, we could be on the wave 4, for example. And the 5-minute and the 15-minute will turn red. They will cycle down, and the daily and the weekly will stay blue. So that's what I meant when I said, see where you are in the bigger time frames. And if we are in a wave 3, if we're bullish on the bigger time frames and the 5 and the 15 turn red, then you would want to set your notification to join the trend once the 5 and the 15-minute turn blue. So you definitely have to look at the bigger time frames first, but it will alert you as to what's going on. So when you see that the weekly, the daily, or the 4-hour are all either blue or red, you would then look at the chart and say, I want to join the trend, and set your notification on the 5 and the 15-minute to join the trend, because we're having big moves right now. Okay, so the smaller time frames are always going to be an Elliott wave cycle of one lesser degree. So the 5-minute chart might only show up as the wave 4, whereas the daily might show you the whole 5-wave sequence. That's why I'm showing you this chart, the 8-wave market cycle, so you can see how the smaller time frames will cycle opposite color when we're in the corrections. I hope that's clear. So this was very interesting because remember I said these are stocks, and these are the banks, investment banks. So remember when I said that most likely everything was red here. If you were following the bank stocks, most likely everything was red. So when everything is red, if you set a notification to let you know when the 5-minute and the 15-minute turn blue, or even yellow, but blue, then it might be, it might be time to buy. So this 5-minute turned blue at 20:43. When I took this printout, Bank of America was 21.67. Citigroup turned blue at 39.15. When I took this printout, Citigroup was 43.98. Now, the 5-minute is going to turn first. Then the 15-minute is going to turn. Then the hourly is going to turn. Goldman Sachs turned blue at 146.66. When I took this printout, price was 158.64. So big moves. JP Morgan turned blue at 86.08, 92.64. Morgan Stanley 30.46, 34.67. So this is it's very cool. Okay, I've got to keep moving. So I'm going to show you an example with the let's see, do I want to show this example? How much time do I have? All right, I don't know what I was getting at with this example, but the pound at 118.09 was bearish all the way down, and the smaller time frames were starting to turn. Okay, we're starting to turn. Well, now the pound is higher, and this gave us an indication. Okay, the dollar Canada as well, it was blue all the way across, and then it turned on the 5-minute first. Well, on the 15-minute, it turned at 143.78, and on the 5-minute, it turned at 143.59. When I took this printout, dollar Canada was 142.45. So let's look at the 6 different time frames with the scanner, and this is what I do. I set up my charts with the weekly, the daily, the 4-hour, the 1-hour, the 15-minute, and the 5-minute. These are the time frames that I'm looking at. And yeah, and I just wanted to show you how you set up your charts relative to the scanner. So we notice that the 5-minute and the 15-minute turned blue. The 15-minute turned blue at 116.64. So down here somewhere, okay, down here. And the 5-minute is yellow, okay, it's currently yellow. The next day, I took a printout of the pound, okay, so this is the original scanner print, but the next day, this is where we were the day before, and the pound has continued to move higher. So at this point, even the hourly would have turned blue, most likely, okay? So this gives you like an early clue that something's going on. Then it's up to you to manage the trade. I mean, let's say you took the trade when the scanner turned blue. How do you manage it? Well, then you have to do your analysis and say, okay, what am I looking for? Am I going to set 2 profit targets or 3 profit targets, or just 1 profit target? And you set up your trade, okay? But the scanner gives you an early alert that something's going on. Okay, and then I guess I must have updated the scanner. I took a printout of the scanner on this day, on the 25th. Yeah. Okay, nothing much here to talk about. I don't know why I even have this. I want to move down now to motive wave, okay? But before we do, let's just review. So 1, we want to scan the entire grouping and note the instruments that have the same color on at least 4 out of 6 time frames. That will give us an early clue. And we want to look at the markets that you trade and filter the scanner to look at just those markets. For example, you want to look at the currencies and look at the crosses related to the dollar pairs. For the stock indices, you may want to look at the other indices, even if you just trade the S&P. For the bonds, you want to look at all the bonds. For the commodities, you want to look at some of the other commodities. So you can scan the entire grouping and note the instruments that have the same color on at least 4 out of the 6 time frames. Like we said, and how you can trade this, if the weekly, the daily, and the 4-hour are in a strong trend, look for trend trades on the smaller time frame. You want to look for the smaller time frames to cycle against the trend and then notify yourself when they join the trend. If the weekly and the daily have almost completed the end of the trend, you can use the smaller time frames to enter counter trend. And that is best seen if all of the time frames are either all red or all blue. So then you use the smaller time frames to enter counter trend and dip your toe in. Dip your toe in. It could be the start of a major reversal, or it could just be a correction, but you can dip your toe in. Okay. I think we've already discussed this. And here's another example of stocks where everything was all red, and then suddenly, you know, the 5-minute and the 15-minute turned blue. So good indication that something was going on. Okay, so this is a summary. I'll just repeat it. Actually, I'm not. We just repeated it. Let's move on to motive wave and motive wave scans. Again, if you want to take a trial, a 2-week trial, please use this link, bit.ly/E, charts for your 2-week trial. So motive wave, since this talk is really about how I use automation, I just wanted to show you motive wave. It's a trading platform to fit any trader or market analyst. It is a customizable trading software. They're constantly updating it. They have lots of additions, but they are really an Elliott wave software, Elliott wave, Fibonacci, harmonic, scan. They have it all. And this is just one example of my charts don't look this complicated. What I am going to focus in on is their scanner. It's not like my heat map, our heat map. It's different. It's but this is what I did. On March 25th, last Wednesday, I told you I did this last week, I scanned for markets that had finished a market cycle as defined by the MACD, trading above the signal line, as well as a royal semaphore, which is a wavy tunnel indicator. But with the scanner, they have like thousands of indicators that you can use and scan for. You can also scan for harmonic patterns. You can also scan for Elliott waves, 2, 3, 4, etc. So I scanned for, this is what it looks like. I scanned for this little indicator, the royal semaphore, and for the MACD crossing over the signal line. These two things, okay? And I came up with a whole list. It gives you excellent, good, and very good, okay? The score, it scores it for you. So I looked through all of these, and I picked out these 5 markets, okay? They were all excellent except for one of them was a good, but it looked, you know, it looked pretty good to me, so I took it. Okay, so these were the prices at which I said, okay, these I looked at these markets. Okay, let's go for it. I just want to show you. We'll take each one individually, and I just want to show you what it looked like. So the Aussie New Zealand looked like this. We had the royal semaphore down here, and we had the MACD crossing above the signal line, the awesome oscillator turning green, so moving up to the 0 line. And this is our wavy tunnel setup. So I thought, okay, maybe we are ready for a PW fill the gap trade. That's what we call it, moving back up to this level here, target. So what would you do? You'd set a stop buy right above this level where the black line, horizontal line is. It happens to be at 101.50, and set the target up here. And whether you set 2 profit targets, 3 profit targets, 1 profit targets, that's really an individual thing. So this is, you know, what happened. It actually moved up there pretty quickly, and that's it. Like just by using the motive wave scanner to come up with that opportunity. And this is, of course, this is one of our wavy tunnel setups. So for me, it's one of my favorite wavy tunnel setups actually, and I just wanted that extra confirmation that you know, I just picked another indicator, and I'm also looking at this filter. I saw that price was above, you know, above this filter, and you can also draw your channel lines and see that, you know, that price, if we go above this line, it will be moving above the channel, which is the downtrend channel. So this is one trade. Here is another, the second one, the Aussie Swiss. This is the daily chart. The first one was on the 15 minutes, so it was more of a short-term trade. So this was the buy at 57.25, and the current daily candle range was, the next day was 58.10 to 59.50. So again, showing, you know, you would have to determine where you set your profit targets. I'm just showing you the scanner feature, and you know, it really worked well on these markets. Then, and this lined up also when we were finding a bottom in the stock indices, you know, and with and in the stocks. So this is the DAX 9680 on the daily, was where it was when the MACD crossed, and we also had the Royal Semaphore, which is good. We're above the filter line. So this is the level, 9680. Now notice, I mean, the next day it went all the way back down again to 9422, and the high was 101.25. Okay, so very volatile day. This is a daily candle. I mean, you would have to decide how you trade it, how you manage it. This is the fourth example, NASDAQ 75.15. Again, we have the MACD crossing the signal line, and we have the Royal Semaphore. The Awesome has a nice peak, and we're starting to, you know, have green histogram bars. So the current daily candle range was 73.75 to 77.60, and the next day it continued on up. The range was 76.16 to 78.89. So this just gave a nice alert, and use this in combination with the scanner, and why not, right? So we would anyway, as wavy tunnel traders, we would look for a move up to this, these three purple lines. Like that would be our target. And we actually hit the first purple line. And then the last example is, no. Okay, the last example is the pound yen. So again, I would say that, you know, as wavy tunnel traders, we would look to the wave as the target, as the target. So the black line is the 132 level. For the buy, we have the semaphore, the Royal Semaphore, and we have the MACD crossing the signal line. And the next day's candle range is 132.13 to 133.84. And I didn't track it after that. That was it. I was just looking for, like, again, it was just last week that I was involved and doing this and trading. Okay. So that's motive wave, how you can use automation to semi-automate, to find your trades. I think that's really what we covered today, how to find your trades and how to pull the trigger. And we didn't talk about semi-automating for taking your profits, because then we would be getting into full-scale automation, right? Now, I don't even know if there are any questions, but I do want to show you, actually, let me see if I can. Let me see if I can open up the chat so I can see if there are any questions. Okay, there is one question that I just want to cover, and then I want to show you what I'm offering for you today, which I think you're gonna really love. The question is, why did I use the 5 and the 15-minute to look for a market reversal when we're trading the bigger time frames? And that is because the 5-minute turn, there is a lag, like it doesn't turn, whereas the 5-minute turns before the 15-minute, which turns before the hourly. There is certainly a lag, and I think it gives us, it's not going to catch the bottom, but from my experience, it is a good indication, if you do a little bit of other analysis, that it does give excellent turning points. It's just from experience. So now I want to show you what we're offering today is the Scanner and Elliott Wave bundle for $297. You would get 1 year of access to the Scanner plus 1 month free in the Elliott Wave desk services. And what I'm going to be doing is I'm going to be preparing some videos which can link the Elliott Wave wave counts to the Wavy Tunnel Pro Scanner. I'm going to be doing, I haven't done anything yet, but I'm going to be doing a series of videos which will also be in the website. After 1 month free, you will be billed at $75 a month for the Elliott Wave desk. Now let me show you what you get with the Elliott Wave desk. You get daily analysis on 20 different Forex, cryptocurrencies, commodity, and stock index markets, providing the clear context to spot the best setups and make tips week after week. The euro, the pound, the Aussie, the dollar yen, the New Zealand, the dollar Canada, the dollar Swiss, the euro yen, the Dow, the S&P, the NASDAQ, the Russell, the DAX, the FTSE, the 10-year bond, dollar index, gold, oil, Bitcoin, and Ethereum. If you trade futures, you can use the Elliott Wave desk counts. Why? Because you know where interest rates are, very low. So there really is no difference between the futures price and the spot price. So even though the analysis is done on the CFD, it's based on the futures market anyway. And well, it's based on the cash market, but there's really no difference. So you can use this analysis in trading futures. You will get a daily report on looking at the daily chart, the 4-hour chart, and the 1-hour chart. You will get a daily video. You will get a back to basics seminar that I did, 4 different modules, really, really good modules. And you also get trading signals that you can receive these signals on SMS or Telegram. So let me show you the results of the signals. These results are in pips. So the results will vary from trader to trader, but these are live documented trades in our account. 2017, 1135 pips, didn't start at the beginning of the year. 2018 made over 3,000 pips. 2019 over 2,000 pips, and 2020 so far 280 pips. So these signals come out, and you can get access to them by SMS or Telegram. And Dave posted the link, bit.ly/capital, all in caps, EWD-scanner, all in caps, all in caps. This is an excellent, excellent, let me show you, it's an excellent value because you get the scanner for 1 year. You get the daily Elliott Wave counts, and as I said, I'm going to put some videos in to show you how you can use the Elliott Wave, the counts with the scanner. And I haven't done that yet, but I am going to do that. Now, I want to just show you the Elliott Wave desk. I want to take you to the Elliott Wave desk. Here we are. You get the Forex daily counts, the futures daily counts, which are the CFDs, daily Forex, 2 videos a day. Juan does these, okay? Juan is our Elliott Wave strategist. Okay, so you are going to hear Juan. He's wonderful. He has worked with me for, oh my gosh, a long time now. I think almost 10 years, okay? So you get the 2 daily videos, Forex and futures, and when Juan comes out with a trading signal, he will talk about it on the daily video. Okay, he'll talk about it on the daily video. So let's look at, I'm going to click on Friday, April 3rd, and these are just the charts that I mentioned. So if we look at the euro, we have the daily, the 4-hour, and the hourly. So you would just click on the chart and you would see the wave count. And of course, you would watch the video and you would see an explanation of what one is thinking about these wave counts. Okay, and then if we click on daily Forex videos or daily futures videos, you will see the video for today. Every single day, you will get a video, 6 minutes, 7-minute video. This is a 7-minute video. So 2 videos a day. So this is an excellent, I wanted to really give you a, something that maybe would fit your budgets in light of what's going on. And I think this is it. I'm very happy with this offer, and I hope that you join us. If there are any, I guess I'm over my time now. So I just want to thank you so much. Thank you for organizing this, David, and thank you for being here, everyone. May you have success in your trading businesses. And I hope to see you on the inside. And I hope this was useful for you.